Welcome everybody. Uh, Last session we are discussed about what is debitor, what is creditor, what is debit. Okay. Today we are going to learn what you mean by credit. Credit means giving the goods, giving the goods. It may be TV, it may be fan, it may be sugar, whatever it is. It may be shirt. We are giving the products to our known peoples, our known peoples, by promising that they have to pay the money worth, product worth money will return later or after some days or in some date, because they doesn't have the money at that time, so they were asking credit. After some days they were going to return money. That is called as a credit. If you go to it is very well known in credit dealers and distributors. It will be there. If you give the credit, the dealers will purchase. You have to give the credit for dealers. Distributor has to give the dealers credit. After 15, they will give about 15 days or 1 month, 2 months, they will give credit. They give the products. After selling them, after 15 days they will return to distributor. Retailer, what he will give the persons to whom he has having a belief, he will give them a credit. That is called as a credit. Drawing refers to cash, goods, or any other asset withdrawn or taken away by the owner from his business for his personal or domestic use. It also includes personal or domestic expenses of a owner paid by the business, paid out of the business money. Next comes expenses, direct expense and indirect expense. Expense related to payment, wages, freight, coolie, electricity bill, etc. are known as a direct expenses. Indirect expenses means expenses related to payments for an advertisement, maintenance, salary to staff, depreciation on fixed assets, traveling expenses, etc. are known as a indirect expenses. Next, direct incomes. Income earned by selling the goods are treated as a direct income. Indirect income means income earned by the receipt of rent, interest, commission, etc. are treated as a indirect incomes. These are the commerce terms which we have studied. Next comes classification of accounts. There are two types of accounts. One is personal account, another one is impersonal account. In impersonal account, one is real account and another one is nominal account. First, we will take personal account. The accounts of different persons, firms, companies, or other concerns with whom a trader deals are classified as a personal accounts. A separate account should be kept for each personal accounts. Real accounts means the account of our property with the help of which we carry business are classified as a real accounts. A separate account should be kept for each property, goods, furniture, for machinery, building, etc. Nominal accounts means the accounts of our various expenses, losses, profits, gains are classified as a nominal account. Next comes golden rules of accounting. Person, there are three types. One is personal account. In personal account, what you have to do, if we are we are running a computer business. If somebody comes and take our, if you give somebody to some amount, or a friend, then what you have to do, we have to debit the receiver, and you have to make the credit the giver. If I give somebody to some amount, means what you have to do, you have to first make debit the receiver whom you have given, you have to debit them, you have to credit the giver. That is the golden rule. Real or property accounts, debit what comes in, credit what goes out. If some material has gone out, then we have to make credit. If you have to debit what comes in. If some material comes in, you have to debit it. Nominal or fictitious accounts, debit all expenses or losses, credit all incomes and gains. Okay, these are the golden rules. We are studied about all theory part. Next we will start how to create a we are already studied how to create a company. We will start how to create a ledger, and next we will continue with the practicals. Thank you one and all. Thank you for watching our video. Thank you one and all.